So, intraday traps, what is meant by that? Again, of course, you should be aware that on an intraday aspect of it, let me put that on full screen here, there will be a few traps you need to figure out, of course, in the process. And of course, we will give you a very good understanding of how to utilize, obviously, our cycles in depth on day 3 and 4, right? But for now, we're going over the basics once again. So pretty much what we will do, of course, inducements, of course, help you, and timing with the inducement helps you to lock them in, and then you just break out structures later, right? Because combining the knowledge is literally what gives you the power. Just only these isolated concepts, they're obviously amazing, but at some point, as you saw literally how Alex said it earlier, to utilize the bigger picture play for even locking it more in, that will be, of course, important. So it will be the entry helper and the other stuff we will show you afterwards. Right? So there will be a lot of stuff you need to combine to get the whole part of that. So right off now, we just show you the isolated concepts, but later, of course, putting everything together. But to make it a little bit more easy, just again for the intraday play of it, again, we have the little steps in here, starting out with the defined liquidity. So where is the liquidity here? So where are most likely induced here? Should be very obvious, right? So pretty much what are the most closest to? Which area should be induced like for sure? Of course, it is this areas inside here, right? Because again, what we're doing in here, already we're building up this false buy trend. We have huge equal lows in here, Asia range as well, right? So guess what? We will definitely should know that we're taking out these areas in here, right? So guess what? Asia range, and of course, the structures to the left will be induced, because again, this alone will not be enough, right? So what can we expect? Again, based on timing, how far from London open are we? So now we're putting stuff together and look at the clock, right? And see, okay, this is 7:50. So technically 1 hour and 10 minutes before our ideal time window of London open trap time. So the question is then, how far will we go up? Or pretty much what should we cover before that? So what we do, first of all, we cover the build up inducement mitigation, right? So guess what? Now we're having our build up, right? So where are we on the cycle? We're on the build up. So guess what? We're expecting the inducement, right? So what in the lit cycle we should expect next? Of course, inducement with timing, right? So inducement, and then after the inducement, a mitigation. So now we need to find out what mitigation it is. So we have an inducement area. So where can be a possible mitigation area be? Right, so we have 2 points here. We have, first of all, this area, the extreme, and this area. So right just now we understand, okay, we're having inducement areas. Awesome. But now we also include timing, and now only having 2 points of interest in here. Okay. Right, so right off now, we already have a good understanding of price should either go here or for some whatever goes here, right? But again, there's nothing in between. We know that it should induce in London. It's only again here and here. So now the question is how we can use timing again for our advantage in this scenario, because we're not sure. Like, how will you know? Like, I'm not a magician, I don't know. So I can use confidence events though and see what's going on. So we take the London Open time window and make it like this. And out of a sudden, it should become a little bit clearer if this is an ideal plane here for an intraday play. So what's going on here? Mitigation area here, mitigation area here, timing. So what can happen? Okay, now think in your head though. Again, this is normal candle sizes, right? You see the normal day, right? So can this happen in here? It looks very weird, doesn't it? Like, out of a sudden, like, what? Okay. Like, whatever, 50 pip candle just in here. It's kind of strange, isn't it? I mean, technically it could happen, but it's most likely not likely going to happen. So that's like, that's not all neutral, right? So again, that's correct. That's most likely not going to happen. So let's look at this scenario. Does this look more like it though? If you just look at the candle sizes, the duration, like whatever, the timing, would it make sense like this? And that obviously makes out of a sudden more sense just by the timing aspect. Of course, like this in here would be just crazy. Like, why would the market out of nowhere just make this huge push and then go lower? Possible, but again, what's the chance of doing that? Not so much, right? It may be news, but again, you can look at the news. If there's no news event, probably not, right? So guess what? So that looks better out of a sudden. So now we can obviously take this one, but obviously worst case scenario, we take this one instead. But just based on timing and the overall play, this will definitely make a lot more sense. We have our build-up, inducement of these areas into mitigation area lined up with timing. So question, what do you think? Are you in the blue corner or in the red corner? Ready? So which corner you pick? Right? So is it the blue corner or is it the, for some reason, magical candle orange corner? Right? So guess what? We let the guys fight, and as you can see, instant crazy punch, instant knockout, you see? So guess what? Flawless victory, and of course, it's more likely this. And as you already see, this already was kind of late. So there's no chance, like, or no point that all of a sudden price pushes like this in here, right? So again, that's how you can use timing as always. Like, again, if the price action here, make the timing sense of it, and then, oh, there you go. Makes a little bit more sense, does it? And then, of course, there's your tube. Okay? So sometimes, of course, you won't get your mitigation, but only the inducement timing. So we will teach you how to use that. Of course, there's a lot of different examples about that. We will not dig into that too much now. We'll skip that now because we don't have too much time. But of course, we will cover that in depth later. For example, if this is a significant point in here, right? Again, what is going on here? Of course, there's no really a mitigation point in here and here and here and here whatsoever. Again, the only point that can be induced is this area. Of course, you want to grab liquidity, right? There's not a clean mitigation in here. There's nothing. That's just wicks, 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 wicks. Right? So guess what? They want to induce higher to go lower, building the channel before that, right? Again, inducing all these minor areas in here. But again, sometimes they go for the main liquidity, which goes in completely higher. And that happens, as Alex said, the Asia range will be play a significant role because as you see, Asia range closes here. So of course, they have so much time left to, of course, induce that high in London Open, whatever, and then make the push. Right? So that makes sense out of a sudden, just utilize Asia range again. Right? That's how, of course, we take all the stuff together and build sense into it. Right? So guess what? Do we have an inducement yet? No. Do we have a build-up yet? Yeah. Do we have a mitigation? No. So what do? Timing. Right? We started to use timing again. All of a sudden, could this make sense? 100% it could make sense. Awesome. So what do we get? Something like this can be the case. Right? So they need to induce as much as they can. Right? They obviously do. And then, of course, you look at this point. Afterwards, you see in here. Guess what happened? Perfect London Open. Make the inducement now. After what? Channel building with speed. Inducing these highs. Completing the same cycle all over again. It's the same thing. It's just inducing structure to the left now. Right? So, again, how do we trade it though? Yeah, exactly. Breakouts, whatever. And now, of course, look at that. Huge overall trend, makes a new higher high whatsoever. And of course, which speed? But guess what? This is the inducement along an open. So what do? We wait for the internal break of structure in here. Maybe in 1 minute. We're marking out our imbalance zones of the inducement. Wait for the mitigation. And off we go. Perfecto. That's how we easily can trade inducement trades as well. Right? So guess what? Another one. Same thing. So what happens afterwards? Of course, now we're making this huge channeling thing. Right? So guess what? Just by timing, US Open, remember, right? We need to repeat the steps all over again. So we are identify liquidity. We're on the cycle, mitigation, right? So guess what? identify liquidity, minor inducement. There we go. That's kind of a medium one already, right? So there we go. What should happen next? We're in a cycle in a minor inducement area, but what else? What we need next? Of course, we need like not only minor inducements. No, that's not enough, right? We need at least a medium one and a build-up afterwards. So guess what? Question mark, question mark, question mark. We don't really care about this minor inducement because we're not even in the medium yet. So we're not even interested in any sorts of reversals yet, right? Not even structure, confirmed, anything. We only know that this is kind of mitigated already. So this falls away anyways because this is already mitigated. So the only place could be here and here, right? So guess what? We can already expect something like this, like minor, medium inducement in here, right? Maybe a build up in here, inducement into the mitigation area, and then goes higher. We can expect it already, right? So what can we do? This projection does look a bit crazy right now, but again, it will make sense in a bit. So what we will do, as you see, they're getting the medium inducement with speed into this weird areas in here, right? So we're having an inducement. We can check the inducement. But do we have a build-up yet? No. Do we have a mitigation? No. We're just having this smash through this medium inducement. It's not enough for reversal anytime close, right? So guess what we do? We take a look at if there's a build-up, because look where we are. We're right above this mitigation areas after an inducement. So what should happen next? Build up, inducement into the mitigation. So guess what? We're having this sort of price action here in the lower time frames, creating this false channel up, creating sideways action. So what should happen? We look at the timing. Trap time is literally in here. So we're marking up the lower time frames. Okay. Build up. Awesome. So what should happen to the build up? That's the inducement that stayed short of the mitigation down here to the left. And timing lines literally perfectly aligned, just waiting for us. So we already have a really good understanding what should happen next. And guess what? The mitigation of our interest area is right below that. Right? So see, it's right here. And that's the build-up area that's created right now. And the timing would align perfectly. So guess what's going to happen? Lower time frame build-up, as we discovered. Timing would be perfect in here, which would map also the mitigation area to the left, plus would finish off the daily cycle reversal. Make sense? So guess what happens? Choop. Perfecto. Again. Right. But there's even more, of course, right? Again, now we're having this huge pullback area. But again, just by the understanding of the whole thing, remember loan on close. Again, remember close is when loan traders exit, liquidity meaning withdrawing the daily positions. So price can start stagnating here or reverse. Just keep in mind always this timing aspect so that the exit in the market to the minute, and price will stagnate from there, and it's just sitting there and does nothing to end the day. It's literally perfection.